Good evening traders and welcome to another edition of the Midweek Market Focus for July the 27th, 2011. My name's Jordan Wodrowski and I'm going to be your presenter for this evening, and the topic that we're going to be talking about tonight is that of cyclicity. But as per usual, before we get into the presentation, I do need to provide everyone watching with a general advice warning. This presentation is aimed to be educational in nature and should not be solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply a particular trading strategy. For those of you who would like to read the remainder of this slide, please pause the presentation and do so now. So let's get into the outline. I'm going to take a look at the news calendar, what's coming up in the next, or for the remainder of the week. We'll take a look at the charts, what's been happening with the majors, as well as some recent trades that are running. Move into the feature topic, which I've already mentioned, of cyclicity, and then we'll summarise that, and then discuss how you can have any more questions answered. So straight away, let's just take a look at the calendar. Forexfactory.com. As always, folks, our risk management assessment for the trading you're involved with involves analysing or at least assessing the news. So not a massive week news-wise, certainly in comparison to next week, which is non-farm payroll. So that's actually Friday week. But yeah, this week there is a little bit happening. Obviously later tonight we've got some news coming out on Swissy, some US dollar news as per usual. Bit of news early tomorrow morning. That's a quite a big announcement on the Kiwi dollar. With the interest rate announcement. Some more US dollar news later on tomorrow night, and then a bit more news there for a few different currency pairs or a few different currencies on Friday. So as always, just make sure you're aware of what's going on around you when you're trading, and yeah, trade appropriately. So let's take a look at what's been happening with the charts. So let's just do that straight away, and I'm going to take us straight into some of the majors and just assess where things are at currently. So I'm starting with euro dollar here on the daily chart. So let's just get everything drawn out properly here with moving averages and whatnot. Few of these major pairs have yeah, been a bit tricky of late, and Euro's certainly been one of those in terms of trend. Simply because we've had this real choppiness through this period of time where essentially price was making it has been making lower highs and lower lows, although price as we speak is above, well, actually all three moving averages that I have on this chart. So certainly above the 50 and the 200 moving averages, the red and the green line. And normally that would have me thinking about defining the trend as long when price is above both the 50 and the 200. Although we certainly don't see these higher highs and higher lows that we want to see in an uptrend. So from a short-term trading perspective, you'd have to be thinking long on euro at the moment, but there are certainly some levels here, some horizontal levels that I would absolutely be keeping on the radar. Just basically these previous swing highs. So if you're looking to take a position long, I would be paying some of these previous levels. So basically back here on the 4th of July, there was a high. Previous to that, early June, 7th of June, the swing high there, and then of course back here on the 4th of May, there was a significant swing high there as well. So yeah, I mean, you'd have to be looking long, if anything, on euro at this stage. Although it's not our picture perfect uptrend, simply because we've got this these lower highs and lower lows that price is contending with. So certainly be careful on euro. Let's jump across to cable. Same thing, we'll have a look at the daily chart. And again, not a million miles away from the picture we just looked at with euro a moment ago. The first thing I notice here is that price is again clear of the major moving averages, so the 50 and the 200. But yeah, as I said, quite similar to euro in that we've had this really 2 or 3 months, or 2.5 months at least of choppiness on the daily chart, which has made it a bit tough for getting consistent moves, or trading consistent moves. Although just in the last few days we have had somewhat of a breakout through the 50 moving average here on the daily chart. But again, what I would now be looking for, I mean, it's long for mine, but again, there's a bit of rubbish back over here that price may be contending with pretty soon. So I would be keeping an eye on some of these horizontal levels that price has, for whatever reason, turned around from in the past, as the next levels of potential resistance. Let's jump across to Swissy, because this one, as far as charts go, this is a lot nicer, because we not only have price clearly, in this case, below, well, all three moving averages now, certainly the 50 and the 200 again, but also the 20, which is the blue line on my chart. But the difference is here we do have the lower highs and lower lows, and in fact, certainly at the time of this presentation, price was actually at all-time lows down here at down near 80.15 at the moment. So yeah, a great looking downtrend on Swissy, which is currently in phase one. We're going to talk about cyclicity shortly in our topic, but yeah, there's been some great opportunities on Swissy and some of the Swiss crosses actually, which I'll mention in a moment too when we look at some of the some recent trades. But a much friendlier and more obvious trend, if you like, on Swissy to go short on. So yeah, definitely looking for short opportunities on Swissy. The last one I'll have a look at, just in terms of daily chart analysis, is the Aussie dollar, and this has been a real mess. Again, quite in a similar way to what we were mentioning earlier with euro and cable. There was this essentially this period of sideways movement here for the last 6 or 8 weeks on the Aussie dollar, but again, not that dissimilar to euro and sterling. There has been a break to the upside in the last week or so, and in fact, again, as at the time of recording, price is trying to make a move towards that all-time high back here from the 2nd of May. So it's up around, what are we, 60 pips shy of $1.10, so 109.40 ish. But again, it's looking for long opportunities on Aussie. You can't see that any other way at this stage. The setup is long, but I would be, again, respecting a level where price has been previously, and certainly $1.10 was the level that price turned around from last time. So essentially, yeah, for opportunities right now, trading on Aussie, I would be paying that level a lot of respect to see what price does around that level. If it breaks through, closes above, and continues on its way, then it's still long. But yeah, it's got a little bit of room to move before it hits $1.10. But I would be careful if you are in a position long. I would keep an eye on it at that point. Now, what I'd also like to do is perhaps just show a couple of, or a few recent trades. So I'm actually just going to show some income generators, because there have been some fantastic opportunities with the IGs just in the last few weeks. So I did mention earlier some of the Swiss pairs have given up a few income generators. So I'm just going to mark or highlight a couple of those. There's one currently running on Swissy, which I like. Essentially because not only it was in that great downtrend that we saw earlier, but this activator bar from a few days back was, as far as I was concerned, that's a high test bar with the open and close in the lower half of the bar. And yeah, since then we can see that price has really made a move. We're not quite, again at the time of this recording anyway, not at the close of day 3 yet, but there will be a decision to make tomorrow in terms of trailing that stop. We've also got Euro Swiss, which is also triggered. I'm going to highlight this bar right there as the one that I liked in the last few days. And while of course there is no A symbol underneath this bar to suggest it's going short, of course that's due to the fact that the bar is the wrong colour to go short on from a basic rules point of view. If I see bars like that, so essentially again a high test bar, so open and close in the lower half of the bar, the bar is in the great part of the envelopes to go short. The only thing stopping that from being an activator is the fact that it's red instead of green. As far as I'm concerned, that can still be traded like an activator. So yeah, essentially those high tests in a downtrend, especially when you see them pull back into a moving average, you can get some fantastic moves out of those. So again, similar to Swissy, there's a decision to be made on that shortly as far as trailing the stop goes. And the other one to do with the Swiss franc that I wanted to point out was Swiss yen, and hopefully this one was a little bit more obvious. And I'm talking about that activator back in there. So again, obviously a bit of a complete opposite here. We looked at dollar Swiss and euro Swiss going short. This was a setup to go long on Swiss yen. So playing the Swiss franc the same way in 3 separate positions. That's exactly what this means. To go long on Swiss yen and short on dollar Swiss and euro Swiss essentially means you're playing the Swiss franc the same way in three different positions. So be aware of your risk management approach to these situations, because to be position sizing equally on all three of the trades that I've pointed out would obviously mean, if you're trading at 1% of your account, that would mean you've got 3% currency risk essentially exposed to the one currency doing the same thing at the same time. So if that's going to disagree with you, then you somehow need to filter these things down to a manageable level, or position size each of the setups smaller so that you don't have yourself exposed too much at once. But in isolation, this was a fantastic setup again because we had a great trend. This was a long trend for mine. Price pulling back nicely. I actually liked the bar before that activator. I like this one as a setup as well, similar to the reasons I gave a moment ago on Euro Swiss. This is just the opposite way around. So we're looking for a low test to go long on. So I'd absolutely treat that as an activator bar on the 21st of July. It didn't trigger, but we can clearly see that the 22nd of July was also a great low test, and of course it was the right colour for the symbol to show up. So this is the thing with some of those trades. I talk a lot to clients about this. Sometimes when you see this 5 moving average pulling in close to the 20, there can be a fear that you're going to lose that trade. But actually, if you understand the picture that you're looking at in terms of reading the shape of these bars a little bit, and I'm big on looking for high tests and low tests depending on the direction we're looking to go, they can often be the most powerful part of the move. And actually, while we're on this chart, I could actually highlight a couple of others of the same for the same reason. That guy back there on the 12th of July was a great setup for mine, even though it's a bigger bar in terms of that type of pull back and then bounce off again. That's a great example of that. And there was an even better one as far as size of the bar is concerned back here on the 4th of July. Exactly the same thing. Price was pulling back, 5 was coming in tight into the 20, didn't cross it, so still a setup to go long, and then you get a low test bar, and often, not always, but often they will give you that reversal sign. So other than that, if I just quickly show another currency pair, US Singapore. This is a bit of a funny one. Some of you may trade this, some of you may not, depending on your access to through your broker. It's not the fastest moving pair in the world. In fact, probably the slowest one that I certainly look at. But it just kind of dribbles away in the background, and the setup that I liked here, again, it wasn't actually an activator bar. The one I actually took or traded as an activator bar was back here on the 19th of July. Not quite a bounce move as the other ones were. This was more a continuation move because the moving average, as far as I was concerned, was running parallel with everything else. But a high test in a downtrend, and so I'm going to consider that as an activator, and off it goes. So yeah, it's an exception to the rules, obviously, no A symbol because it is the wrong color, but again, you can if you understand what you're looking at with these setups, there is room to adjust the rules and refine things in little subtle ways, and that's certainly one way I'll do it. Okay, so let's get out of that and go back to our topic, back to our presentation, which is cyclicity. We're going to talk about cyclicity. Successful technical trading is primarily about understanding the stage of the current price cycle we are in. For trend-based strategies to be effective, we must identify the trend and then establish if we are in phase 1 of the trend. Ideally, look to enter early in phase 1. So, yeah, I mean, obviously, if we're talking about analysing snapbacks where we're not relying on trend, then none of this is really relevant to trading snapback. But if you're looking more towards, well, income generator or pivots or snipers, then yeah, then cyclicity and trend, actually trend and then cyclicity is extremely important. So let's just have a look at what we mean by phase 1 and phase 2, and hopefully this is just a quick bit of revision. The top part of our illustration here represents a downtrend with the red line here, and the squiggly black line representing price action. So in our textbook downtrend, we are looking for lower highs and lower lows. So essentially the trend line or the moving average, if you like, whatever that red line represents, connecting those lower highs. But we can also see there's some lower lows being made. And phase 1 in a downtrend is essentially the down leg. Okay, so the downward move in a downtrend represents phase 1, which means the upward move, so this part here or this part here in a downtrend, is what we call phase 2. You'll also often hear us talk about it as a retracement or a pullback. So yeah, it's the move back against the trend. That is phase 2. If we look down the bottom of the screen here, talking about an uptrend. So again, the red line represents our trend line or a moving average, a level of support. Black squiggly line showing price action, making higher highs and higher lows, and our trend line or moving average is along connecting those higher lows. So in our uptrend, the upward leg, this up move here and here and here, would all be considered phase 1 because it's in sync with the trend or in line with the trend. And this downward leg in an uptrend, so here, here and here, would be considered phase 2, or again that retracement. Okay, cyclicity and time frame correlation. Ideally, more than one trend will favour your position. yeah, when trading intraday, look for long-term and short-term agreement. So if we're talking about pivots or snipers, when I say look for long-term and short-term agreement, essentially the agreement I'm looking for would be the daily chart and an hourly chart to essentially be in sync. That's what I'm kind of referring to in terms of long-term and short-term. Um, that's basically how I look for my short-term opportunities. Cyclicity should also agree. Look for daily phase one and hourly bounce into phase one. So that's critical, and I'm going to show that in some charts in a moment. When trading a short-term or hourly bounce, the bigger time frame, the 240-minute chart, will often look like it is pulling back. So don't be surprised, folks, if when you're doing your analysis for Sniper, for example, don't be surprised because I know, with I think all of the coaches, we'd often talk about a bounce on the hourly chart is critical to a Sniper working out. Um, that is if you're taking the break entry on a Sniper, so price crossing the 50 moving average. Um, but often when you do that, don't be surprised if the 240 chart is actually against you, or it looks like it's pulling back against you. Um, it almost has to if you are trading the bounce on the hourly chart. So um, let's go and look at some examples of this. So I'm going to get out of here again and take us straight into eSignal. Get back on our short-term charts. And there's two pairs I want to have a look at to hopefully explain what I'm talking about here. I'm going to show Swissy because it is a great looking trend at the moment. And I kind of already talked about this earlier, but there is hopefully we can all see that is in a long-term downtrend, okay? Which means within that trend we have phase one, we have phase two, we have phase one, we have phase two, we have the lower low phase one, which is great, the pullback phase two, which means we are now in phase one again of that trend on a daily from a daily perspective. But what I actually want to kind of illustrate here a little bit is if we zoom in on just the recent price action, okay? So I'm just gonna mark this on this chart. So I'm going to draw a line just over the last. I'll do it over the last few days. Okay, so that's essentially marking the last 4 days or so on the daily chart. And with that line on my chart, what I can actually do just by typing, you can actually just type the number straight into your keyboard and this change symbol box will appear. Or you can hit comma on your keyboard and the same thing will happen. Okay, the change symbol box will appear. So I'm just gonna type in a number, does the same thing. Because I actually want to switch the chart to a 60-minute chart. So I just type 60 into interval. I click on OK, excuse me, and having hit enter or OK, now that it was a daily chart a moment ago, we can still see that black line that I drew on the chart a moment ago, representing the last 4 or 5 days, whatever it was. But now we can see essentially now the candles, or in fact I'll change this to bars. Now the bars are hourly bars. So one bar is representing an hour as opposed to one bar representing a day, which is what we were looking at a moment ago. So that black line at the top here is essentially, if I take you back just to see that again, that black arrow is looking at phase one. This is phase one of the daily trend. Remember, the overall trend was down, long-term downtrend, has been for months and months on Swissy. Okay, but I'm looking at the last few days, which basically is phase one of that long-term trend. Okay, so again, I go back to the hourly chart. So when I zoom in on those last few days, what I can actually see here, if I just move that out of the way a little bit, on an hourly chart, on a much smaller time frame, I can also see there is a short-term trend happening. So essentially that phase one on the daily chart, when you zoom in on that and have a closer look at it, and you can use the hourly chart for that, you can actually see that we have some more cyclicity going on here. That's phase one. That'd be phase two. That's the pullback. There's phase one again. There's phase two. There's phase one. There's phase two. There's phase one. There's phase two. So there's an argument to say that perhaps we're close to getting back into phase one on this short-term trend. Okay. Now, this is where you can get some fantastic opportunities to or high probability setups really, because there was, if you remember, I showed an income generator that was already running on the daily chart, but and obviously it's going to depend on what strategies you're looking at and how often you're in front of the computer to see this sort of stuff, but this is where you can really maximize a move by playing, perhaps taking a setup off a daily chart like an activator bar for an income generator, or a power pivot type move if you master traders listening to this, because a good income generator or a good power pivot can capture the beginning of phase one on the daily chart. But then what you can do is essentially dig into the hourly chart, which is what this represents, and see that there was some great opportunities kind of in this area. I'm not necessarily saying there was an entry signal in here, but there's a better one in there, and to some extent maybe even something most recently, for short-term opportunities where the hourly chart was transitioning from phase two back into phase one. So what is absolutely doable with this stuff is that you may have a longer term position running in the background, like an income generator or like a power pivot. But if you're willing to dig into the smaller time frames and get in sync with this, the trend and the cyclicity of this shorter term chart, like an hourly chart, there will be some opportunities to re-enter. Okay, and that's how you can really capitalize on moves when things are trending, because you can, like I say, have that longer term position bubbling away, ticking along on the daily chart, but in the meantime you might be taking some opportunities for some snipers or pivots, whatever it may be, or power pivots again for master traders, or 20 bounces for master traders. You might be able to hit some of those short-term trending opportunities, and still hold that long-term trending opportunity as well, and really, really get a lot out of a move. So if you can get in timing or in sync with both those, with both the long-term cyclicity and the shorter-term cyclicity, you're you're gonna do great over over the long term in terms of a probability point of view, because you're really getting in sync with things. What was the other one I was going to show? So that was that one. I was going to have a look at Kiwi as well. Let's have a quick look at Kiwi. So let's take this back. Kiwi's been one of the nicer looking trends that we've had on the daily chart in recent times. It is going bananas at all-time highs at the moment, up around we're looking at, it's around 87.30 at the moment. It's trying to push up towards 88. So again, if we look at this longer term trend, hopefully that one just sticks out nice and clearly. Price clearly above everything. We're making the higher highs, higher lows. I don't mind how you define the trend here. That is up. Whether you're using moving averages or your three-touch trend line or all that combined. Yeah, this is just awesome. So if we have our overall uptrend moving this way, again, as we said earlier, the up leg in an uptrend is phase one, which means the down leg in an uptrend is phase two. That was the retracement, and then we are currently in phase one. Okay. So as we did earlier with with Swissy. I'm going to do a similar thing here on Kiwi. If I just essentially draw that black arrow there under those lows of the last 10 days or so, that's essentially looking at phase. Remember, we're looking at phase 1 on the daily chart. So now I'm going to switch the chart to an hourly. So again, I'm just typing in numbers on my keyboard. That's type in the 6, it automatically comes up. Change that to 60. Hit enter on that. Okay, and now again we can see those two black arrows that I drew on my chart. This longer black arrow here represented the actual trend line from the daily chart, whereas this upper black arrow represented the phase 1 move on the daily chart. So if we just take a closer look, and I'm just going to move that out of the way a little bit, but again, hopefully what we can see here within this move is there is some short-term cyclicity in here. It was a little bit choppy through here, but yeah, essentially that's a phase 1 move, that's a phase 2 move, that's a phase 1, that's a phase 2. Things went sideways for a little bit, so not great through here. But then, so a bit of a scruffy mess through there, but then price is clearly broken back up into phase 1 again. So if we are, again, looking to overlay the short-term and the long-term trend and cyclicity here, to me, it doesn't really look like we're at the beginning of phase 1 right now. Price looks a little bit overextended on that hourly chart. But if we were to see price come back and tag one of those moving averages, whether it be the 20 or the 50, and then essentially turn around and do something like that, get some sort of favourable close going the other way, well then that would represent the beginning of phase 1 on the short-term trend, okay, while also being in sync with the trend and cyclicity of that longer-term trend. So that's exactly where we want to be for your short-term trades. That's where the probability is, without a doubt. I mean, it's not. Unfortunately, there's no guarantees with this stuff, but if you get enough good setups like that, if you're willing to be patient and disciplined enough to sit around and wait for those sorts of opportunities, you undoubtedly have an edge to do this stuff. So it really is just a matter of yeah, if you're willing to sit around and wait for the good ones, they will appear, and when they do appear, yeah, it's a matter of letting those probabilities play out. Okay, so back to where we were. In summary, talking about cyclicity, we need to look for the trend first and then assess the cyclicity. Again, if we're not, if there is no trend, there is no cyclicity. It's as simple as that. So, yeah, you can't have cyclicity without a trend. Phase 1 is always in the direction of the overall trend, and there are trends within trends and cycles within cycles. So getting in sync is critical. And that's basically what I was trying to explain there with Swissy and Kiwi. I say this a lot to my clients as well, especially those short-term moves. If you've been executing on a 5-minute chart, so specifically a pivot trade or a sniper trade, if you have lost too many of those trades for your liking, then I would want you to consider what the hourly chart was showing you or looking like when you took that position, when you clicked the button to get in, because that timing issue of capturing that bounce move into phase 1 on the hourly chart is often what can make or break a trade. So yeah, if you can get that bigger picture off the daily chart to be clearly moving in a direction and clearly in phase 1 of that trend, and then you dig into your smaller time frame, essentially the hourly chart is what I've been talking a lot about, and looking for that shorter term trend and kicking into phase 1 there as well, then yeah, like I say, you've got to hit those ones because that's where the probabilities are. Okay, that basically wraps up the presentation from me, folks. If you have any further questions, please feel free to post those at our website at livetradingfloor.com.au, and I'll be replying to those in the next 24 hours. But yeah, I'm going to sign off for now. I hope you've enjoyed the presentation, and I look forward to talking with you again soon. Bye for now.